Welcome to Markets Now. I'm Michelle Rook with DuWayne Bosse at Bolt Marketing, and mixed trade in the grains as well over in the cattle market, higher in the hogs. All right, DuWayne, let's talk a little bit about the grain trade first. Corn and wheat futures managed to end higher here. I think that's the fourth up day for the wheat market. How much higher do you think we can go in the wheat, putting in war premium or because of short covering even?
Yeah, I think it's mostly, well, it's all war premium, isn't it? It's not like our exports are flying off the shelves. I mean, they're solid, but they're just blah, blah. We've had a lot of rain in the southern plains, winter wheat conditions getting better. To me, they're probably going to look dang near excellent going into freeze up here. But it's all about the war. And Russia, Ukraine, it seems like there's headline after headline every couple hours here. I think it's important to note that the funds are short the wheat market and short quite a few contracts. So if this war continues to escalate and people go back to thinking this is actually going to be a problem getting wheat out of Russia, Ukraine, I think you could rally back up quite a bit because those funds might want to out of all their short positions. And let's just say if they want to do that, I think $6 is possible. Would I be a betting man on it? Probably not, but I'm just saying it is a possibility.
Yeah, the only other headwind, though, is the fact that the dollar index has been so strong. It didn't stop out wheat today, but it certainly continues to be a headwind for all the grains, doesn't it?
It really does. And I'm afraid in the coming export sales report, the weekly ones, I think you're going to start to see that pressure of the US dollar going higher. Obviously, as our currency goes higher, it's more expensive for foreign countries to buy our products. Yeah, that is a headwind, but it was impressive today, like you mentioned, for the wheat to even close higher. Usually, that's kind of a staple trade. If you see the US dollar up sharply, you can just count on wheat market falling into the close. But that didn't happen today. It kind of goes to show that I think we're running out of sellers in that wheat complex. And if somebody wants to take a gamble on it, it seems like it is to the long side, assuming war continues to escalate there. But yeah, the US dollar is definitely a problem. I do not want to see it take out 107. I want it back to 100, but I don't get what I want all the time.
No, none of us do. The corn market, did corn just follow wheat today? It kind of looked that way.
Well, yeah, those two are always intertwined, but corn market feels strong by itself. And it's probably because of the strong demand we've had. Now, we didn't have any daily sales announcements for corn this morning, but still, I think exports have been very strong all by themselves. I really like the chart pattern. You know what I really love in the corn market is that the funds are buying. What's disappointing is they've gone from short 300-some thousand contracts to long 100,000, and we haven't even rallied 50 cents. That's very depressing, but whatever. I'd rather be on the fund side. And if they're buying, I don't think they stop at 100,000. They're probably pausing here during the holiday a little bit, but I think they want to keep buying that market because of our strong demand. It can push us up to that 450 area, I think, on the nearby futures.
Okay, well, we've been having trouble in the December contract. I know we're going to go into option expiration, but we've been having trouble getting above 435 there. So that's kind of one benchmark that we have to at least cross first. Cash basis levels, though, you mentioned how strong the demand is, and cash basis levels have been really strong in a lot of areas for corn too, haven't they?
Yeah, they really have. I mean, you got to watch for that right now if you're a producer. I know so many of us get done with harvest, the bin doors are locked. You get in and you see that stack of paperwork in your office and you start to work on that. But just because it goes in the bin doesn't mean it has to stay there till next spring or summer. Where there's some really strong basis bids right now out there, and if they want to pay you even money or a good basis to come pick up your corn or soybeans right now, let it go. We've already sold most of our soybeans based on that, and I think it sounds like come next week, they're going to start to come pick them up. So there's a little bit of a supply pinch, which is funny after the big crops we've had, right? It makes you almost question a little bit, but take advantage of those when they pop and get rid of those grains.
That's because you farmers aren't selling the grain, right? That's why it's the basis is strong. You close the bin doors.
Yep, boy, you read that right, dead on there. Yeah, that's what I mean. Farmers we get in our habits, our seasonal habits. Harvest is done, the equipment's put away. It rained, and now look out my window, it even snowed last night. So nobody wants to go start the truck up and start moving grain. That's why those bids have to improve. But I'm saying you got to take advantage of those and maybe sell when nobody else wants to.
Yeah. So option expiration on December contracts coming up on Friday. We have first notice day the week after that. Sometimes we get some ugly looking activity around that time period. Do you expect that again?
Yeah, I do. You know, surprisingly, this has been fairly quiet considering it's D's option expiration. You know, July option expiration, no for the beans, and now D's for the corn. Usually when you get to those, I almost kind of back off trading a lot because it just seems squirrely. It's just, we go to where the open interest is. And when I look at the open interest in D's corn options, you know, it is, you know, 430, 440, kind of looks like a decent area for it to settle. Fairly organized here right now. The chart looks good. But yeah, if something squirrely happens the rest of this week, that's probably why. It's just a whole lot of volume exiting the market in these options. And you probably see that early next week too. And then remember, a holiday next week. So we've got that mixed in there. So yeah, don't be shocked to see a little bit of a squirrely trade here.
Yeah, we get light volume. That is easy to make that market move that way. Soybeans, we were lower today. You know, is that about South America, this China-Brazil trade deal that was signed today, or was that just flat out this soybean oil market imploding?
Well, let's start with the soybean oil market. Yeah, veg oil market was down globally last night, and that hurt our soybean oil market. And it's funny, I'm upset when we follow the global markets lower, but I had no problem when we were following them higher. And we got to remember we did that too. We broke an upward trend line on the soybean oil. I don't like seeing that on the chart. But yet, longer term, I'm really bullish the soybean oil. With the stuff Trump is talking about as he gets in office, you know, putting the taxes on veg oils as they come in, tariffs, everything like that. Yeah, I know tariffs have been a negative news item, but for soybean oil, I think that's going to be a good thing. And we're exporting more of these soybean byproducts all the time. Oil exports have been great. Meal exports have been good. The problem is like meal down to contract lows. I think it really should find support, but the market just looks heavy. And raw soybeans, man, I thought today, if we don't see a daily sales export announcement, then I'd get kind of bearish the bean market again. But we did see the daily sales this morning to China and to unknown. And I thought, okay, we're going to get back to unchanged on the day. And we still struggled. Even with corn and wheat higher, we still struggled. And beans ended up finishing lower. That market just feels heavy. What I really struggle with, Michelle, is to be bullish corn and wheat and bearish soybeans. But I am. But those markets don't just go in opposite directions.
But again, it's a lot because of the South American crop, though, right?
I'm sorry, I forgot that's what you're asking about. Absolutely, 100%. And their weather looks good for the most part. Now, there is a little bit of dry market in like northern Argentina, but they're expected to get rains this weekend. If they miss those rains, maybe we can get a little steam going next week on a light volume holiday week, you know, get a little bulls excited or something. But if you have soybeans left on farm or in commercial storage, which I just hope you don't, any weather rally in South America needs to be sold. You get up to 1050 for nearby beans, and I just want all my beans gone.
And the cattle market, like I said, live cattle futures anyways were mixed. We were a little higher on the feeders. And do you think we just chopped today because we have cattle on feed report coming up, or because we just haven't seen much cash?
I think chopping today is a victory, especially you look at a feeder chart. I mean, we raced higher, and then we had this narrow little range on top today. Not a bad deal at all, because we should see some profit taking, right? You should see the market pull back, and you didn't. It still finished green. Really like that market. You know, last week, remember last Friday, feeder market just took off, and none of us really knew why. Obviously, it was always at a discount to the cash market, and I figured that would come around eventually, but I was following the seasonals where November should be a tough month for cattle. It just seems like funds said enough is enough, and they stepped in and started buying feeders, and that came into the fat market this week. I haven't heard much on cash, so like you said, you're probably right. That's probably why we didn't do much today. I know feedlots are asking $2 higher, but we're always asking $2 higher. We always want $2 higher. But cattle on feed report probably makes the market pause just a little bit. You know, every Wednesday, Thursday for a cattle on feed report, you usually get a pullback in these markets. So get that cattle on feed report out of the way, and I think we can continue to be a bullish market here.
Yeah, but let's separate cash fed versus feeders, because the feeder cattle market, the cash market, is pretty much on fire. Isn't that why feeders are the leaders here?
Absolutely. And I like it when feeders are the leaders. No, yeah, the feeder futures were at a big discount to cash. And then I think cash is going to keep rolling higher to like a 256 on the index. And locally here in the Dakotas, probably even higher than that. So I think like your January board is going to keep having support or be pulled up to meet that cash. You know, quite the opposite on the live cattle, where cash has been dipping lower. Packers have been able to pull the prices lower, and the futures were right at or above, so they had to pull back. So there's your difference in the two markets.
And not that any of us can figure out hogs, but I thought maybe hogs were rolling over here, but today we're back up. So the fund's defending that big long position they have.
Bingo. I think you nailed it there. No, I'm the same way. I looked at the hog market in a chart and I thought, oh, this might be ready to make a sale here. It looks kind of ugly. And I do still think February can get down like $79. So for producers, I would be hedgers out there. But you're right. Funds are record long. And I think today, because I didn't hear a whole lot of product movement, cash fundamentals. So I think it was funds probably protecting their long positions, getting it up a little bit just so they can exit those long positions for really nice profits.
Yeah, don't you always tell me the days you can't figure out what the market's doing, you just had more buyers than sellers?
I should have led with that. There was more buyers than sellers today in the hog market.
Good answer.
Nailed
All right,
it.
thanks for joining us. DuWayne Bosse with Bull Marketing, that is Markets Now.